Good morning.
Morning.
Okay, we are so excited about this panel. We're going to hopefully take you into the brain of a venture capitalist thinking about AI for the year ahead. And I know you heard brief intros. I want to do quick two-line descriptions of the amazing group of people that I'm honored to sit on the stage with. I'm James Joaquin from Upfront Ventures. I'm a co-founder there. And I've been about 2 decades in venture. Before that, I was a 3-time venture-backed CEO and built and sold companies to Apple, to AOL, to Kodak. Kobie Fuller, general partner at Upfront. Kobie's been a general partner there since 2016 with a core investing focus on AI, enterprise SaaS, and immersive extended reality platforms. Kobie also has 2 decades in venture, has been in places like Excel and Insight before Upfront. Vanessa Larco joining us as a partner from NEA, and she joined NEA as a partner in 2016, focusing on both enterprise and consumer. And prior to venture, she led product teams at Box, Twilio, Disney, and Xbox. And last but not least, Brett Gibson, managing partner from Initialized. Brett is a software engineer. It's good to have some nerds on the panel. 4-time founder and a seed stage investor at Initialized. He manages the investment team there. He leads their AI and machine learning investing, as well as space tech, cloud infrastructure, crypto, and dev tools. So, amazing set of experience on stage. And I want to jump right in and try to ask some questions that I hope are questions on your mind as founders. All of us on this panel are actively investing in artificial intelligence, and I think that statement's probably true for 90% of all venture firms. And the last 12 months have just been a feeding frenzy with VCs and AI, and valuations have gone through the roof as part of that feeding frenzy. We've also seen the magnificent 7 public companies doing what I call revenue round tripping, where they're investing $50 million in an AI company that's then going to buy $50 million of cloud or AI chips from them. That's also contributed to some sky-high valuations. So I want to ask our panelists where we think we're going in the next 12 months. And Vanessa, I'd love to start with you. You shared with me a prediction that valuations in the area of enterprise apps were actually going to come back down to earth. So please share your thoughts on that.
Yeah, I think 12 months ago, we were seeing at the app layer a ton of companies come out of the gate with a ton of traction, both on engagement and revenue and new users. And it hit all of our targets, right? $1 million ARR in less than 12 months. Some of them had $10 million ARR in less than 12 months. And VCs just lost their minds. And we all went out and started investing at the typical valuations that we would do for companies with that kind of growth and scale. And what's transpired since then is that a lot of them lost steam, right? And they churned out users at greater numbers than we expected and we've ever actually seen at the scale in which they've reached. Revenue plateaued or also started declining, and those valuations no longer made sense. So I think for the next 12 months, everyone has taken a bit of a step back and are trying to find what are the metrics that are true leading indicators that this company is driving long-term value for their customers. And those metrics aren't the standard ones typically. Like, yes, engagement and retention is somewhat there, but every company requires a lot more digging into to figure out what's actually happening. And what I would say is that there's a ton of risk in investing in AI. 12 months ago, we're like, AI is inevitable, all of this is going to win, and we're going to make tons of money. And now we're like, well, hang on. Some things will and some things won't. So I think we have to right-size that.
Some of that loss of steam was a lack of a moat, that it became hard to have a long-term advantage versus what everybody else is offering and what everybody's getting from the foundational models?
Yeah, I think moat is one of the hardest things to communicate when you're an enterprise SaaS product. Like, what's the real moat? It takes a long time. It ends up being like workflows and system of record and all of those things, but those take time. SaaS has never really had a true technology moat like infra.
Yeah.
So the moat is the same as SaaS moats, to be honest. Like, there's no like magic AI moat. But what I actually think happened was the value wasn't there. And so what I would say is for a lot of these broad, highly applicable AI startups, they do a lot for everyone, but not everything. And you have that last mile problem, but in a workflow. So if it gets you 80% of the way there and you still manually have to do 20%, the cost to switch from what you're already doing is just too high.
Yeah. Kobie, when we spoke, you shared that you believe this craziness will continue in terms of this AI feeding frenzy. But at the same time, for you and your team at Upfront, you're looking to stay disciplined, to invest early, own 20% of a company for a sub $5 million check. How do you balance those two conflicting forces?
Yeah, I mean, in theory, I say that, and we try to do that, obviously, for our LPs in terms of the way we described how we manage the fund. But in practice, it's really, really hard. Like right now, it is like so exciting to be building a technology company, investing in tech, all this amazing innovation you're seeing possible. And if a founder kind of comes across the table, I see something in my inbox, and it is something that sounds truly disruptive, and you can see it change the world in some regard, and it's like a seed round that's raising $15 million. Still part of me is like, I'm still maybe gonna take that Zoom call. And then you never know, you get down this like slippery slope where then you bring in a partner meeting and it's like, do we actually make this an exception? Do we actually make an exception to our rules with regards to check size, entry valuation, ownership, because we think this is a business that needs to be in the upfront portfolio? And that's the tough job about ventures, because most cases we shouldn't be doing that deal, but it's for those companies where we should be making an exception and actually getting in them because they are a category defining business that we choose to do so. So discipline in practice is incredibly difficult. And so we try to have these guardrails with regards to, for us, median check size out of our fund is $3.5 million. We target 20% ownership across 5 partners on the seed stage side of the program. We do 2, maybe 3 deals a year. High conviction in terms of how we spend our time. But sometimes, we break the rules, and sometimes we break the rules where maybe it's one partner that wants to break the rule, and we trust each other to do so. But part of doing that is we take very much a focus per partner in an industry where we have some expertise and knowledge around where, if we see an exception, we chase after, and we run after it. So it's difficult in practice, but we try to do so.
I think that metric of each partner doing 2 to 3 deals per year is really critical. Think about a venture firm that probably sees 2,000 investment opportunities a year, and with 4 partners, maybe that firm is doing actually 12 investments. That's a very steep funnel, so the quality bar is really high.
Yes.
Brett, as a former software engineer, you get to look under the hood of this rapidly changing landscape of AI. I mean, you've written production code a lot more recently than I have. I think you built a lot of the Y Combinator software and tools, right?
Yeah.
And as you're looking at AI startups at Initialized, and you're seeing just the core technology moving at such a rapid pace, from multi-point attention models to diffusion models to, a new research paper next week, how do you manage that? How do you navigate the technical rate of change with AI?
Yeah. It's well, thanks, James, and thanks everybody. On the one hand, it's really strange because if you think through when I think about the current generation of models, I don't think that they're near as even near their full potential in terms of how much they're going to change writing software. There's a lot more that can be done. It's just that it takes a while to actually integrate these into systems and to figure out how to use them, because it's a fundamentally different way to write software with these non-deterministic systems that they just take a lot of wrangling to get to them to do what you want them to do. It's easy to get them to do it once. It's hard to get them to do it 99 out of 100 times. And so it's bizarre to be like, well, on one hand, even if new models never came out, we're going to see a crazy amount of change and a lot of push towards agents writing software. And then on the other hand, if you think about these generations of models that are coming out, and how big the gap was just between GPT-3.5 and GPT-4, and you extrapolate out to GPT-5, it's kind of terrifying to be writing software in front of that, because it's clearly going to obviate some of what's going on, but which parts and how. And there's a kind of a high level intuition of how do I architect this product such that it takes advances from the foundational models as strictly additive? But that intuition, is a little fuzzy, right? You don't actually know what they're working on, how they're going to do it, and you see the big players releasing all sorts of things that are outside of the core, just improve the language model. And so, to some extent, I was kind of joking about like maybe we should be like reading these OpenAI release announcements, kind of like the public investors look at earnings calls where you want to deploy heavily after a new model comes out, but going into the next model, maybe we should be pencils down for a little while because who knows what's around the corner. And especially, which is relevant this month, right? We're getting to the point where people are like, maybe GPT-5 is getting pretty close here. So.
And that's true for Anthropic and Google as well. We might be timing, our investment pace might start to look like a sine curve in between these developer conference days.
Well, and now it's even getting crazier with, what Meta is releasing and how fast. I was kind of like, at first I was like, GPT-5 will, OpenAI will kind of stay ahead by a release or so, and that seems to no longer be true. And then I was like, maybe the closed models will be ahead by release of the open source ones, and I don't know. We'll see.
If you're a student of history, you know that technology disrupts itself quite rapidly. So it's going to be fun to watch in the next 12 months. For my next question, I want to shift gears and pick your brains about a contrarian idea, something that our audience couldn't read on your website, but something contrarian about AI that you believe is true that most investors probably don't believe yet. Something you're seeing, and I'll model good behavior and kick us off. At Obvious, we have a contrarian idea that's different than most VCs going after enterprise and productivity applications of artificial intelligence. We're focused on something we call generative science, which is building large science models trained on chemistry and physics and biology, where the AI is actually outputting or predicting new breakthroughs in science that we think can solve big problems in climate, in human health, and material science. So I'll pass the virtual mic to you, Kobie. You've had a chance to think about this question.
So it's an interesting question because AI and everything's moving so fast, and as I'm sitting in my seat thinking, like, what should my thesis be with regards to how to play some of this stuff, you'll be in a world where, like, a month or 2 months later, like, something happens, like, oh, wow, like, it's totally taken everything I have in terms of, like, a concept for what I would do and just tosses into pieces. You have to rethink things, which is quite exciting and scary at the same time. So an area that I thematically am obsessed with is trying to leverage AI in a way where lots of people think that using our AI like makes you like less human and it's like the machines taking over. But in contrast, I feel like AI has the power to connect humanity in a way that's like never before been possible. And if you think about what these foundational models have done, they've kind of productized the ability to just like reason and have knowledge. But if you think about like the knowledge that you can extract from humanity at scale. And if I have an ability to take the knowledge that's in my head or anyone's head in this audience or someone that's written in a book and like forget just like these LLMs, but you think about like next generation retrieval models that you can actually leverage to then create a situation where I am working on an LP deck and I have no idea how to actually construct the right narrative as I'm going out to investors, but for some reason I have access to Mark Suster's brain who has knowledge baked in his blog or website that then within some embodied AI device allows me to then real time adjust and actually understand what to put on a slide deck. Like extrapolate that out to every type of knowledge, every human on the planet in different contexts and different layers of enterprise software. We're living in a world where we can actually leverage AI to connect us all together in a way that is like quite amazing, quite powerful, and quite personalized based on how we actually learn and how we actually want to work, how we want to entertain ourselves. And so that's a theme that I've been spending time thinking about, which like manifests itself into probably like dozens and dozens of businesses, ways to think about next generation enterprise software, entertainment, work, therapy, you name it. And so that's where I'm spending time.
So collective, global, conscious hive mind. If anybody in the room is working on that, talk to Kobie afterwards.
There you go.
Brett, tell us about your contrarian idea to build one AI agent to rule them all?
Yeah, I've been thinking a lot about what happens to the number of apps and if AI gets more and more advanced, especially in agent-based workflows, and does it mean we end up with a lot fewer apps? Because a lot of workflow, like end-user facing software, is effectively specific workflows to specific tasks that needs a human in a loop for intermediate decisions. And so as we increasingly trust agents to make those intermediate decisions, why do we need relationships with so many applications? Why doesn't the agent just go figure it out somewhere on the back end? I mean, because you could imagine it's like the computer, the ship's computer in Star Trek. It doesn't hand them off to some sub app. It just goes and does whatever needs to be done. And so I guess that would mean that a lot of things that are end user facing SaaS today end up being more like API-based products.
Do you think the Magnificent Seven have an unfair advantage to be that frontmost window or that frontmost microphone?
It also suggests that distribution is more important than a lot of things, and that there's going to be if a lot of the technology becomes more evenly distributed and perhaps in many cases commoditized, then owning user relationships is going to be extremely valuable.
Yeah. Vanessa.
Yes.
You shared with me a really powerful insight about what happens when AI moves from a co-pilot application to an autonomous agentic piece of software. When that happens, that today's software as a service pricing models just become an epic fail.
Yeah.
And that how startups price these services to enterprise will have to fundamentally change.
Yeah, I mean, if you think about it, the typical SaaS model is you build an app and you sell licenses per user, per seat, per month. And historically, when you look at your retention, we look at your net dollar retention, you look at basically, okay, well, as my customers grow, they hire more employees and then they get more seats. And that's how these accounts grow. And that's how my retention and everything goes over 100%. Great. The problem is if your AI is actually working, and I come back to the value, is it delivering the value? If it is, you need less people.
Maybe there are no seats.
Maybe there are no seats, right? So you either need less people or you need no people. And so this natural, like as this company grows, my account size grows, that kind of evaporates. And we're seeing it already in some companies that are really great at making people very productive. Those companies are like, I love this product. I don't have to hire more people. Mm-hmm. And you're like, oh, well, that's why the retention looks like this. It's just not growing. So that just puts you at odds. That just means that this SaaS-based model doesn't really work. And so what we think is going to happen is there'll be likely a platform model to smooth out the curves, and then the rest is going to be either transaction-based pricing or usage-based pricing, or my favorite is value-based pricing. So, one of my companies said, like, if we reduce your cost of storage by this much, then we just pay us a fraction of whatever you save. And if you save nothing, you pay us nothing. Customers love that.
They're taking risk with the customer.
Tremendous risk. So your product really has to work. But I think ultimately the North Star is going to be value-based pricing.
Amazing. Okay. I think a great way for founders in the audience to try to understand how could their startup be one of those 3 deals a year that each of you are doing is to share an AI investment that you've actually made and that you're excited about, and tell us a little bit about why you're excited about it. Brett, tell us about Playground.
Yeah, we're extremely excited about Playground. Playground is creating image generation models, effectively diffusion models. I guess for this audience, 2 things stand out as interesting. One is it's an amazing example of why we why we partner with people first. In that, it's Suhail, founder of Mixpanel. And he came to us wanting to build cloud-based browsers. So browsers that ran in the cloud. Laptops got really fast. That idea didn't make any sense anymore. He decided AI made a lot more sense. And then the second part is how it's very early. It's been remarkable. He started working on this while while Stability and Midjourney were well into building amazing image generation models, and as was OpenAI, and extremely determined, relentless founder, like his ability to catch up was quite remarkable.
You'll hear VCs say this over and over again, bet on great teams. Those great teams sometimes pivot and totally move into a new market. Sounds like that happened here.
Yeah.
Kobie, you backed a company called Soot, a visual file system for creative work. This blew my mind when you told me about it. Can you share with the audience?
Yeah, I'll try to be brief, but this is a combination of both, in my opinion, technical excellence in terms of one founder, but like Vanessa said, there's no real moat in regards to like technology feels like these days in enterprise software, and the CEO having this kind of creative genius branding sort of DNA behind what he's trying to build. So long story short, their theory is that file folder systems, as we know them today, are fundamentally archaic in terms of how you actually find and discover information, especially images. So if you're working, say, as a designer in Nike and you're trying to find some asset to repurpose for an upcoming, say, Paris Olympic campaign, trying to actually find some of those images, it's possible, but the ability to actually then look through a body of knowledge, visual data, and then find something that resonates the right manner, this exists across all facets of file or image discovery. It's kind of broken, and so their thesis is that it should be more of a visual UI on top of images or assets. They're starting with images first, but they're going to the entire sort of like file system, where they're allowing any individual to upload data, and then it converts it into embeddings, and then they're visualizing it in a graphical 3D interface that's web-based, that then allows you to have this real-time interactive, very poppy, almost feels like a video game style experience for discovering, sharing, and playing with knowledge.
Sounds perfect for spatial computing.
Exactly.
I'm imagining Minority Reports and moving in 3 dimensions through a file system.
That's exactly the idea, and the ability then to like curate images, use that to then potentially train a diffusion model down the line that then is trained within the way in which you actually want to create images. There's lots of downstream applications that I think is pretty exciting, and they're going to be coming out of stealth in the next few weeks.
Amazing. Vanessa, you invested in a really interesting company called Orbi.ai.
Yep, that's right.
Can you share a background on that?
Yeah, I typically invest in Series A companies. This was a seed opportunity, which is a lot earlier than I normally go, but it was an incredible team. To your team point, it was a product leader out of UiPath, and she'd been trying to implement AI at UiPath and couldn't get it to where it needed to go for a lot of technical limitations. And her co-founder had built a lot of AI in Google Cloud and ran a lot of the blue sky thinking in that team. And so they partnered together to create a next generation process automation software that runs in your browser. It's a browser point. And what was interesting to me, it's like, well, you could do so many things with something like this. It basically looks at what you do all day long, and then it'll say, hey, James, looks like you do this process over and over again. Every time you get an email from Vanessa, you schedule a 30-minute meeting, you send her a Notion doc. Do you want us to, every time you get an email from Vanessa, just do this for you? If you say, yep, thumbs up, it'll just do it for you. So it has enormous applicability, but I always worry about that it solves 80% of the problem, but not the last 20%. So does it really deliver value? So I decided to focus on one very specific use case, which was in finance and just helping with expense report reconciliation. And they do that extremely well. End-to-end, 100% solve the problem for the end user. And people love it. And the design partner was very enthusiastic. And what was surprising to me is that it's a huge market. There's so many people.
Just that?
Yes, just that one thing. Their design partner spends tens of millions of dollars a year just doing this. A lot of Fortune 500s have these enormous teams that do this. So I was like, wow, surprisingly bigger market. And they will expand and they'll go through some adjacent use cases. But where they're starting, it's big and it works.
Wow.
It works all the time, the whole way through the workflow.
And many entrepreneurship books have been written about this idea. Find a very specific beachhead that you can just do better than anybody else, 100x better, land there, and then expand.
That's right.
Sounds like they did that. Well, I'll quickly share an AI investment that we made at Obvious Ventures that we're really excited about. It's a company called Inceptive. Incepta was founded by Jakob Uzakrit. He's one of the Transformer 8, one of the 8 authors of that seminal Google Brain research paper called Attention is All You Need that really ushered in what we now think of as generative AI. Their next act, Jakob and his team, they're actually building a large science model trained on messenger RNA to actually be able to predict optimal vaccine RNA strands for any given virus target. So it's an example of that generative science theme that I mentioned earlier. With that, we are at time for our panel. We are going to be doing a Q&A session in the networking tent after this. I want to thank you all for your attention, and please give a round of applause to our amazing panelists.
Thank you.
Thanks.
It's great.
Nicely done.
That was good.